All right, so a year ago, almost exactly a year ago, I started this mock portfolio on Interactive Brokers. So I wanted to kind of go over how the year went and my plans going forward, etc., etc. First things first, if you get value out of the video, please like and subscribe. Always appreciate that. So the first thing I wanted to mention is I did ever so slightly outperform the S&P 500. Depending on where I look, I find that they say that the S&P was up about 18.5 to 19.5% in the last year. So I did ever so slightly outperform. Obviously, it could shift. S&P's up big or it's down big over the next few days or whatever. Obviously, that could change. But at the time of me making this video, that's how it went. So I'm happy I did outperform, but it was literally by a minuscule amount. So definitely could have done better. I mean, looking back at it, I should have bought MicroStrategy sooner. I was, fairly conservative with that, so I should have done that sooner. And I do have some positions that didn't turn out great. Just going right through it here. So I do have it organized by market value. So this is largest to smallest. So let's just go through everything here briefly. MicroStrategy, easily my biggest position. My cost basis is about $350 a share, so I am down slightly on that. But I'm very confident they're going to do well in the long run, and this is probably the main reason why I will continue to outperform the S&P. And frankly, outperforming for 1 year is not that big of a deal. I want to be able to outperform over the 5-year, 10-year, 20-year period. That's what's really important. MSCI, I'm up quite nicely on this one. This is one I'm just going to be holding. I don't plan on selling. I might start selling covered calls on it, but I don't plan on selling it. QLYS, this is one I'm basically even on. I'm still confident in this. I think they're a really good company. I think they're a little undervalued right now, so I'm definitely going to be holding that. EQB, I think this is one that I'm up the most on, actually, which is good. Very much like EQB. In the future, I might even buy more because I think it's a very good company, like I've talked a lot about before. The next one is Go Easy. I'm basically even on that one. Definitely just holding. If it corrected, quite a bit more, I might buy a little bit more. But I also don't want any position other than MicroStrategy to be more than 5%. And I don't even know if I want MicroStrategy to be more than 10 or 20%. It's right now it's probably just under 10. But definitely don't want any other position over 5%, so I would probably have to wait a little bit on that. Domino's I'm up on. That's one I'm just holding. MSTY, this is one I mainly have for the dividend, and I do trade options on it a little bit. Applied Materials, I'm basically even on. This is one I'm probably just going to be holding. I do like the company where it's at right now. I think it's a little bit undervalued. Southern Copper, another one that I am going to be holding for the long run for sure. I would like to make my position larger on this one. The next one is Skyworks. This is one I've changed my opinion on recently, mainly because they have been underperforming recently, and the last earnings report was very good, or very bad, sorry. They lowered guidance, so this is one I'm definitely looking to exit the position, and I'm not necessarily selling it. What I'm doing is I'm selling calls on it. And right now it's around $65-$66 a share. I'm simply selling calls at $70-$75 a share, a month or two out, and if it hits, it hits. I'm happy to lose the shares because I'm not confident in the company. If not, I'm just going to keep holding until I eventually lose the shares. Watts Water Technologies, this is one that's just a hold. I think it's a solid company. I'm not really looking to make it a massive position, so I'm definitely just holding that. Manhattan Associates, I'm basically even on that one. This is another one's a hold. I don't want it to be a massive position. ODFL, this is one I really like. I'm basically even on it. Another one that I'm looking to increase the position in. AOS Smith, this is another one that I'm looking to get rid of. Their growth is just slowed, so I'm not as confident in them as I once was. Another one that I am simply going to be selling calls on. When I lose it, I lose it. It's just as simple as that. Installed Building Products is the next one. I'm also basically even on, down slightly. This is another one that I probably will add to eventually. This is a URA. This is one of the uranium ETFs. This is another one that I will slowly add to over time. I'm very bullish on uranium over the long run. So there definitely is some risk involved, but I'm fairly bullish. So I definitely will be adding to this one. Masco, this is another one that I'm kind of neutral on. I don't think I'm going to be adding more to it. I am selling calls on it, fairly a ways out of the money, so we'll see how that goes. CNQ, this is one of my top oil and gas companies, so that's why I own it. I might increase my position a little bit on this one, but I feel like I have close to what I want to be ideal there. IIPR, this is another one that I might increase a little bit, but probably not that much. I like it. I think it's undervalued where it's at right now. I think it's worth probably, I don't know, $90, $100 per share. So I definitely think it's a little bit undervalued. Dollarama is one that I'm up quite nicely on. I wish I would have added more to it because I timed the bottom on this almost perfect. I think it was about a year ago or so. It hit the low hundreds, and I'm kind of upset I only bought 100 shares, but what can you do? It happens. The next one is Vici Properties. This is another one that I probably will add a little bit more to. I like it. I think it's one of the better REITs out there, so that's why. Brookfield Asset Management, this is another one that I would like to add more to. I am up very nicely on this company, probably like 50-60%, which is really good. I timed their bottom basically perfect as well. Another one that I definitely would be adding more to, but I think it's definitely too expensive where it's at right now. Pulte Home, another one that I would like to add a little bit more to. Although I think I'm simply selling cash secured puts. And the last one is Microchip Technology. This is one I'm also looking to exit. I think that they just have underperformed recently and their guidance isn't as good. So this is another one that I'm looking to exit simply by selling calls on. And again, if this is the first time you've ever watched one of these videos, my strategy is quite clear with this portfolio, and as you can see here, is simply to sell cash secured puts on the companies that I want to be buying. If I don't end up with the shares, I still get paid. If I end up with the shares, I end up with a company that I like at a price that I think is fair or even a discount. That is the beauty of cash secured puts. I think cash secured puts is one of the easiest ways to outperform the market over the long run. I would add covered calls into that category. This is something that everybody should be taking advantage of. You have to keep in mind as well, though, that options are not easy. I think cash secured puts and covered calls are quite simple to learn. If you want to learn like some more butterfly strategies or bull call spreads, bear put spreads, stuff like that, I think that's a little bit more complicated, but your simple covered calls and cash secured puts are something that everybody should be using. Technically, cash secured puts sometimes you're not allowed to do in certain tax sheltered accounts. Usually it has to be a margin account, at least in Canada. I'm not sure about the States, but options are something that everybody should be using. Like this is the fact that more average investors aren't doing it is kind of crazy to me, because it's an easy way. Well, it's once you learn, it's quite easy. And like I said, I don't think cash secured puts and covered calls are all that complicated. It's once you know what you're doing, it's a fairly easy way to outperform. Now again, you have to be very patient, you have to be very disciplined, and you have to be willing to do it over the long run, because it's not going to be something even over a year. It's something that you're going to see minuscule difference. This is something you're going to have to do for years, even decades, to notice the effects. Because if you look at the difference between returning 8% per year and 9 or 10% per year over a year or two, it's virtually nothing. It's virtually nothing. Even on a $1 million portfolio, that's $10,000. That's nothing when you have $1 million to work with. So it has to be something that you do over the long run, and to be good at it over the long run, you have to be very disciplined. You have to be very disciplined because a lot of times with options, number one, people just use calls and puts, especially if you do it naked. That there comes a lot of risk there. But if you know what you're doing, it's a very easy way to do it. So if you take MicroStrategy, for example, this is one that I do it all the time on. MicroStrategy, let's say that you wanted to enter a position on MicroStrategy, you would simply go to the options chain here. I hope it loads because sometimes it doesn't. You can choose however far out you want. Now again, some stocks aren't going to have weekly expiries. The ones that have very high volume will have weekly, sometimes even like your QQQs and like the SPY, they might even have daily expiries. So that's something that you have to be disciplined in choosing your expiries. But if I was looking to enter a position in MicroStrategy, I would simply go to the put side, because when you're selling a put, that is basically saying that you want to buy the company at a certain price. You don't have to do it, but you want to. You can go into, it's currently at, let's say it's at 329. Let's say I want to buy it at 280. You can see all the numbers here, and when you look at, a lot of brokers will even show you, the Greeks are important to learn in options. They'll also tell you the probability of making money, right? The probability that it comes out profitable, which is important, because with options, you see that the 280 puts sells for $1.21, at least at the time of me making this video. If I go to, let's say, the 300 puts, it sells for 330, so almost three times the price, almost. But the probability of making money it's gone down, right? It's gone down to 85. And if we go to, let's say we go to the 320 put, because this is probably the one that a lot of newbies would be like, hey, that's the one you should be doing, because look, I can make $880 in a week. That's easy money. Well, the probability of making the money just went down to 71. So you have to keep in mind that just because you're making more money on the initial put or call doesn't mean that it's a better way of going about it, because the more money you're collecting, the less likely you are to collect that money. So you have to be very disciplined in the strike price. You have to be very disciplined, and a lot of people see it and they want to make the money now rather than consistently making the money over the long term, because the way you consistently make the money long term is you have to be more out of the money. Like, you have to be fairly far out of the money. When I'm selling options or calls, I typically want that probability of a profit to be like over 90%, because if let's say the shares go down a lot, and it goes down, let's say it goes down to like 250, you're either gonna have to take the shares at 250 the shares are going to go down to 250, and your cost base is going to be 280, so you're going to have that loss, or at least the paper loss, or you're going to have to buy it back, and you're going to have to spend a lot more money to buy it back than you sold it for. So that's why you want to sell fairly far out of the money, because the likelihood of losing money is lower. So if we go to the call side, again, fairly simple. I would probably go, I'm just guessing, probably the 380 or so would be the closest. Yeah, 94%. So that's probably roughly where I would sell. You have to keep in mind that if some major piece of news comes out, like a Bitcoin, like a legit strategic reserve or something along those lines, MicroStrategy is probably going to go up, 20, 30, 40% in a week. The beauty of selling calls is that there's no way to lose money selling calls. Selling puts, technically you could lose money and never make it back. Technically, it's unlikely if you play your cards right. But selling calls is like it's impossible to lose money. The only way you can lose is by, let's say the shares go to $400 and you sell at $380. You lost that $20 between $380 and $400. So long story short, that's kind of how covered calls and cash secured puts. There's people that know a hell of a lot more about this than I do. But that is basically my strategy. Every position that I enter, I'm doing it through selling puts. Every position, not ever, probably 95% of the positions I enter and exit, I'm using options. And the reason for that is that it's an easy way to outperform the market. So anyway, like I mentioned at the start of the video, if you got value, please like, subscribe, comment, all that good stuff, and stay tuned for more.